Good morning, dear colleagues. I'm extremely happy to open up this webinar on Swiss stewardship in practice. The Swiss stewardship is a key topic for our industry. I know, actually, I would say it's not a key topic, it is the key topic. Most of the assets our industry is invested in, both for asset owners and asset managers alike, most of these assets are invested in the secondary market. And stewardship is the instrument to make an impact. And collectively, I think as an industry, we need to shift our focus even more towards impact, towards stewardship. And don't get me wrong, there's nothing wrong with working and improving disclosure reports, working on transparency. That's all very good. But climate change is real. Climate change is a problem, and good luck to those who disagree. And we don't solve this problem if we just describe it every year in ever greater detail. No, we have a role to play, and stewardship is the instrument for us. And I was extremely pleased and happy when we established here in Switzerland the Swiss Stewardship Code a while back. That was an excellent document, an excellent starting point, but it's just paper. And I'm even more pleased that together with PRI, AMAS has worked on converting this document into action, into real impact. And today's webinar, if you look at the agenda, today's webinar focuses very much on these practical aspects. First, we will hear Aurélia Fin. She will give a brief summary about the very recently launched publication on the practical aspects, on the learnings of our industry in the stewardship field. Then we will hear some excellent case studies. How is it done on an institute level? We have Valerian from BCV, we have Tillman from J. Safra Sarrazin, and Ivana from Balwas. They all work on stewardship day in, day out, and can share their experience, their expertise with us. It's going to be followed up by a panel discussion with the same participants, but it's also led by Olivia. It's also an opportunity for you to ask questions. The chat function will be open for you, so bring in your questions, also critical aspects. We want to have a discussion today. We close off the event with remarks from Victor, from PRI. And before I now hand over to Nikhil for also some opening remarks, let me thank you. Let me thank those who made this webinar possible. First and foremost, I look obviously to Nikhil, to Victor, to Olivia, and to Aurélia. But I would also like to thank all of you who work actively with the industry on the practical implementation of stewardship, be it in participating in roundtables, but also offering us a home for holding these roundtables. And with this, Nikhil, over to you.
Thank you indeed, Adrian, and a very good morning to you all from a very rather rainy and gloomy London. I hear there is sunshine in Zurich, there's sunshine and warmth and joy in Switzerland, so I'm delighted to be here. Let me just reintroduce myself. I'm new to the party. My name is Nikhil Chogle. I recently joined the PRI as director for the EMEA markets team. In my previous role at Deutsche Bank, and most recently as the global chief operating officer at Citibank, I've had several productive engagements with the Swiss wealth asset management and stock exchanges ecosystem. So I'm very pleased to be here virtually, and I know the power of the Swiss ecosystem. Many thanks to AMAS for coordinating this webinar with the PRI and for the wider collaboration behind this publication and the broader Swiss Stewardship Code. PRI, we see stewardship as a core investor responsibility. Core, indeed. We represent the collective views of about 5,200 signatories globally and representing almost $140 trillion of assets under management. This is all ESG money, not necessarily ESG money, but this is money that is interested in ESG integration, stewardship, sustainable finance, and sustainable investing. We see PRI signatories are active owners, and they incorporate ESG issues into policies and various practices. Stewardship in Switzerland and globally is evolving rather quickly. At PRI, we're publishing Active Ownership Framework 2.0, and this sets the foundation for a more ambitious stewardship to deliver against the interests of beneficiaries, improve sustainability, and build a resilient, world-class financial system. We see stewardship practices mature over time, and the expectations from clients, beneficiaries, regulators, investors such as you and I, and effectively the boards, has shifted from, do you have a policy, to can you actually have a credible approach? Are you consistent? Do you have effective tools, controls, governance? So there's a lot of evolution that has taken place in the world of stewardship. At the same time, the range of topics for stewardship engagement, for proxy voting, for detailed scrutiny analysis is increasing. This is raising the bar, and it's not just to demonstrate activities and boxes that you've ticked, but also how stewardship choices are translating to the right engagement priorities, the right escalation strategies, and the right voting decisions. In Switzerland, PRI has 232 signatories. This, in my opinion, is a key region for unlocking sustainable capital. You're a very powerful jurisdiction. Despite being small in size, you're large in capital, and you're large in terms of your intellectual capital to make things happen. Therefore, PRI is delighted to support investors by organizing quarterly roundtables in collaboration with our colleagues at AMAS, and where we're delighted to provide a platform to asset owners, investment managers, service providers to share their best practices, to share their learnings on how challenges were faced and overcome, and exploring solutions in a collaborative platform. Considering the success of these roundtables, well, I haven't been part of it, but my lovely colleague Olivia and Victor tell me that these roundtables have been a great success. PRI and AMAS have sought to capture these and document these key learnings, key insights. And as part of the shared AMAS PRI stewardship events, we aim to foster knowledge sharing, offer practical guidance, and expand collaboration and stewardship practices. That's why this publication was launched together with AMAS at the end of last year, and it's focused on practicality. Yeah, no more theory. Let's get into how, why, and how do we unlock value. It synthesizes the Swiss investors' shared thought through AMAS PRI roundtables. These were held between January 2024 and June 2025 last year. And what stewardship looks like on a day-to-day basis, this is what we're looking at. How do you implement this? What are the sticking points? Right. And if you're interested and if some of this content has piqued your interest, your thoughts, I would like you to contribute to the next iteration. I would encourage you to join our upcoming AMAS PRI roundtables and engage with us directly. Bring your questions, bring your challenges, bring your skepticism as well, because this is an ecosystem through which we can collectively move on from thoughts, principles to practice. It's very important that we get into the implementation side of things. So just to round off and give thanks for everything that's happening here and my delight for being part of this, please join our platforms, join our pension fund managers, asset and wealth managers, risk and data service providers to help develop solutions and best practices that'll help optimize processes, improve ESG risk modeling, and generate alpha. It's a great platform to be part of, and we're delighted to support it. With that, I'd like to hand back to Aurelia. Thank you very much for having me, and thank you very much for the opportunity to support the excellent work that's happening here in Switzerland. Over to you. Thank you.
Thank you very much, Nikhil, and good morning, everyone. I'm very happy to officially launch today the joint AMAS and PRI publication, Swiss Stewardship in Practice, which was first presented in December last year. and provides insights on the different roundtables held on the topic in 2024 and 2025. This publication can be downloaded through the link you can see on the screen. And before jumping into the details of what the publication entails, I'd like to provide a few elements of context. If we take a step back, and as the title suggests, the objective was really to get insights and to learn from practitioners on the different ways asset managers, asset owners, but also service providers exercise and practice stewardship in Switzerland. And the anchor for this was, of course, the Swiss Stewardship Code that was published in 2023 by AMAS and SSF. So as most of you may already know, AMAS and SSF indeed published the Swiss Stewardship Code, and this code really provides the guidance for more stewardship across the Swiss investment industry while offering a framework that leads to better comparability. It was elaborated by a joint working group led by AMAS and SSF, and is applicable on a voluntary basis. But after the code was published, we did receive a lot of feedback from our members who really needed practical support to further implement the code. It's been mentioned, but the idea behind is really great. We've got a great piece of paper, but how do we implement? How do we move further? Additionally, we also had members calling for the opportunity to be able to join forces on collaborative initiatives beyond the international one, and that's how we basically we elaborated last year the engagement letter, where you can find online on our website, and and following the QR code on the top right corner. But for the topic of today, building really on the first feedback on the need for learning opportunities, AMAS partnered with PRI to elaborate comprehensive workshop and Swiss Stewardship Roundtable with the aim to favor these peer knowledge exchanges and to disseminate best practices across AMAS members and PRI signatories, so covering the asset managers, asset owners, and service providers. And to date, 9 roundtables have been held. They received significant interest from members from the start in Q1 23 and were systematically waitlisted. So quite a great success. And that's how we decided to make them kind of quarterly and to have a frequency and offer that type of frequency to our members and signatories. But in order to disseminate the content of the case studies and the discussions beyond the 25 participants that were lucky enough to find a spot on each of the roundtable we could host, AMAS and PRI have been working on this publication that would gather all the case studies presented by the members. I mean, actually not all of them, but the most that we could, and which includes the key takeaways also of the discussion that were held. And that is how the Swiss Stewardship publication came about. What you'll find in the publication includes the takeaways of the discussion in the context of that were held in the context of the first 5 roundtables that tackled the first, basically 4 principles of the Swiss Stewardship Code. So we followed also a bit the structure of the code, looking at topics such as governance, stewardship policies, voting, engagement, looking at individual, collaborative, but also policy engagements, as well as escalation strategies. So in the publication, you'll find 14 case studies from 11 contributing institutions that tackle those different topics and that provide real life and concrete example of how those different topics and principles were lived across the industry. And how they were, how the different challenges that were identified were addressed. And it covers institutions from different sides, from different types as well, from, as I said, asset owners, asset managers, and service providers. It's really aimed to practitioners. So it's definitely a practical tool designed by practitioners for practitioners. The key rationale for the publication was really to disseminate actionable examples and best practices related to stewardship in Switzerland. The idea was also really to showcase diverse organizations, as I said, also across different sizes, different types, really illustrating the fact that, I mean, there is not a unique strategy, but a diversity of ways where stewardship can be conducted and can be practiced. A third objective was really to accelerate collective progress through those peer knowledge exchanges that were very much valued by the different also in the context of the roundtable by the different participants. And finally, really reinforcing Swiss responsible investment and stewardship foundations, highlighting some of the resources that exists. I mean, the very rich resources from PRI, also kind of showcasing some of the AMAS initiatives. I mentioned the engagement letter, and also, I mean, most importantly, to give visibility to members and signatories initiative. So really, this peer knowledge exchange was really the rationale for the publication. As mentioned, the different topics covered really build on the first 5 roundtables that were held. I mean, we also had roundtables before May 24 that were mostly introductive, and that was really trying to kind of set the scene in terms of how do we shape those roundtables. But what you find in the publication were basically the content of those 5 roundtables that you can see on the screen. That happened from May 24 to June 25 on the different topics. On the different topics that you can see on the screen, including 2 on engagement, where we had a lot of interest from members on the topic of engagement. That is obviously very rich as you address of individual and collaborative and policy engagement. So we had 2 on that particular topic. Those roundtables were held across Switzerland. Very happy to be able to cross both sides of the Sarine. So we've been holding the roundtable in Zurich, Basel, Bern, Lausanne, and Geneva. We are definitely happy to host any future roundtables in Lugano or any other city that is not on this map, but also the same cities. Obviously, we need to be where our members are. But that's an opportunity actually for me to thank again really the AMAS members or PRI signatory who hosted us in those different instances, as well as the ones who contributed and shared their expertise with others as during the workshop and also in this publication. So with that, I hope this has sparked your interest in downloading, in reading, and most importantly, in using in your work the content of the publication. Let's not leave this as another with paper. I mean, the idea was really not to do that. So we really hope this provides practical insights and practical tools for practitioners to use and to accelerate and really to enrich your stewardship practices within your institution. We remain, of course, available for any question on the publication, and we'll take the Q&A separately during the interactive part of the webinar. And before this kind of overview, we are now moving to the practitioners part of the webinar, where 3 practitioners will deep dive into 3 of the case study that you will also find in the publication. So with that, I'm passing the mic to the first speaker from VCV, Valérian Huelin.
Good morning, everyone. Thank you, Aurelia. And first of all, I want to thank AMAS and UNPRI for setting up this webinar and for the publication behind it. I think this is really helpful to all of us. So the topic I want to share with you today is really how to set up an engagement approach, and hopefully how to do so by being pragmatic and realistic about what your organization can do, but also can't do. Because we'll see that engagement is quite a complex topic, and it should be taken seriously. So at BCV, when we started to develop and design our engagement approach, we quite quickly came to the realization that we were kind of limited internally in terms of time and resources that we could dedicate to stewardship and engagement, because we are a relatively small team for responsible investment at BCV. And it was not possible to develop a credible engagement approach fully by yourself without getting any help. So we had a look at the different options that we had in the market, different possibilities that we had regarding engagement, and we came up with a kind of an hybrid approach that you can see on the screen that combines different layers and different pillars for engagement. And the rationale behind that was to have something, the broadest scope as possible, but also to be something that is relevant for our specific resources, but also expertise. So the first step, and it was maybe the quick win for us, was to start with collaborative engagement. It was the easiest step to get a first view of into the world of engagement, and we started by joining Climate Action 100. So I think quite a lot of asset managers do the same, because it doesn't require too much resources, and you can also have a look into you can be helped by asset managers that have much more expertise regarding engagement. So that was the first thing that we did. And then secondly, we wanted to implement some indirect engagement through an external provider. And for us, what was important for us in that aspect, it was to have the scope, the broadest scope as possible, and one that is very relevant to us. So at BCV, we have quite a focus on the Swiss market when it comes to our investments, and we wanted to have a service provider that was specialized on the Swiss market, to have the best matching as possible regarding our investment universe and the scope of engagement of the provider. So we ended up selecting Ethos after a very thorough RFP. So we evaluated all the service provider on the market, and Ethos was really what stand out for us. And finally, so if we see those first two layers of collaborative engagement and indirect engagement, we can see that we at BCV are not that active. So this was not the goal for us. We also wanted to be involved actively in engagement. So we wanted to do some direct engagement by ourselves. And maybe that is the layer of engagement that is most specific to us. So we had a look at what asset class was most relevant for us, and we came up with Swiss indirect real estate. This is an asset class where we have a very strong footprint in the market in Switzerland. So we have quite a lot of influence if we want to engage with different actors in that asset class. And also, this is an asset class that is sometimes not as well covered by the traditional engagement actors. So we started some direct engagement for Swiss indirect real estate. So we do it by ourselves. And because we didn't want to get lost in we wanted to have a credible approach. So we have a very specific, the scope is not that wide. We only cover a few of these investment vehicles because we want to do it well. We also, as I said before, we don't have that much resources and that much expertise on that on engagement. So we want to take the time for each investment vehicle to really do an engagement that is of high quality, because we didn't want to just have a check the box approach and just cover as much as possible of these this indirect real estate, but we want to be of high quality. So the scope is quite limited. Maybe if we move on to the next slide, this is just kind of if we go back to indirect engagement, this is at the screen, you have the topics, the criteria that we took into account when we selected our provider. And so you see that there are quite a lot of things when you're selecting a provider that you want to take into account to make sure that the provider is the best match for your specificities as an asset manager. So I will not go into detail into all of these. As I said, one that was very important for us was the scope, and especially the coverage of the Swiss market. Because if you have an external provider that is doing a very good job, but is not covering any of the investment that you have in your portfolio, it doesn't really make any sense. So I think that for Swiss asset managers that have maybe as us at BCV a focus on the Swiss market, this is really a criteria that you have to take into account. And I'm not going much more into detail about the case study. If you want to have a more specific aspect, you can dive into the publication by AMAS and PRI. But now I'm going to hand over to Tilman for the next case study spotlight.
Thank you, Valeria. And good morning and hello also from my side. My name is Tilman Jund and I joined Bank J. Safra Sarasin in January 2025. I'm happy to present the stewardship approach of us. So who are we? We are a team within the asset management division of the bank of 12 professionals that work on different work streams on topics around sustainability. One of the sub-teams with 3 people, including myself, is working on stewardship, engagement, and voting. We do stewardship activities for 20 to 30 funds. But before going into stewardship, I also would like to mention that there are 3 other building blocks that are applied for our sustainable investment approaches: exclusions, integration, and contribution. Together with a stewardship, we apply these approaches for our internally managed funds. Great, let's now have a closer look into our stewardship approach that is impacted by different regulations and best practices that you can see on the next slide. Most importantly, by the SRD2, the Swiss Stewardship Code, and also the AMAS self-regulation that you all are most aware of. Our stewardship practice is divided into 2 components: proxy voting, where we exercise voting rights for equity holding, and engagement. For engagements, we know 3 different types. So we are active in one-on-one dialogues. Those are direct dialogues that we do or apply with companies that we are invested in. We also join collective investor dialogues, collaborative engagements. And we are also active in policy dialogue, where we are approaching standard setters and policymakers. So now Valeria already talked about the constrained resources that we all have and how time consuming it is also to do engagement or stewardship activities overall. Our approach to face this are that we defined 5 triggers to have like a constructive approach to know with which companies or which topics to engage on. You can see the 5 triggers here in the middle of this slide. So we defined 3 strategic topics. Those are related to topics that the bank's asset management or where the bank's asset management has made a specific commitment. Those topics are climate, biodiversity, and human rights. Here we defined clear criteria to screen and to find companies where we want to engage on these topics. We also do engagements on our investment strategy or specific ESG objectives. So, for example, if a company is part of an investment strategy that follows a specific ESG-related objective. Then there are also more reactive triggers, for example, controversies. So if there are potentially material ESG-related incidents or controversies that occur at the company, we might reach out if sufficiently material. And also around proxy voting, so around AGMs or EGMs, if we have questions or concerns on resolutions submitted to a company, submitted by a company's annual general meeting, then we reach out to clarify, but also to make our points clear and to drive or to use this opportunity around an AGM to come with our points. And lastly, we also do disclosure-related engagements if we see insufficient reporting practices at company. Great. So if we go to the next slide, we have already seen like the first part by explaining the triggers. I've already explained the first part of our one-on-one company engagement process. So after we know with which company to speak about which topic, we initiate the dialogue in accordance with specific objectives that are set usually beforehand, sometimes also after that, if this or just comes out of the discussions, and using different forms of communication, such as calls, emails, letters, in-person meetings. After that, the engagement is tracked and the outcome is evaluated and categorized to determine the success of the engagement and also later to be able to report in a consistent way. At the end, the decision is made on whether the engagement has been successfully concluded or whether it has to be continued or even escalated. The in-house ESG rating of issuers that we do can be adjusted downwards or upwards as a consequence of the engagement process. In extreme cases, even a divestment is an option. Lastly, and very importantly, the communication. So the internal rating outcome, but also the impact of engagement dialogues and all the statistics around the engagement processes or dialogues are then communicated on a regular basis internally as well as externally. With this, I conclude and hand over to Ivana, who will speak about Baloise stewardship.
Thank you very much, and good morning from my side as well. Many thanks to AMAS and to PRI for organizing this and inviting us to be part of it. So as already said, my name is Ivana. I'm part of the responsible investment team at Baloise, and for the past 3 years, among other things, I have been also responsible for the direct engagement activities. For Baloise, direct engagement activities represent one-to-one dialogues with companies on specific sustainability issues. And today I would like to walk you through the direct engagement process of Baloise by focusing on 3 aspects. The first one is how do we select the cases? The second one is to show you the steps involved in the direct engagement process. And finally, to show you or to provide you with some figures on what direct engagement meant for us over the past 3 years. So let's start with the first one. That's the selection of the cases. I would like to outline here that Baloise relies on MSCI ESG data for responsible investment decisions, and therefore the input that we use for selecting the cases for direct engagement, is also based on MSCI ESG data. And there are 3 main triggers for direct engagement. The first one is related to the overall MSCI ESG rating. What Baloise does is we calculate the rank of each company within specific industrial sector. compared to the peers. And we have the so-called best-in-class approach, which means that we are allowed to invest only in 80% of the best performing companies in terms of ESG within a specific industrial sector. Now, of course, this is a very dynamic measure because firms can improve or can deteriorate in their performance. Furthermore, additional firms can be added to the same industrial category, which can also affect the score of existing firms. Therefore, if we happen to have investments where we observe a deterioration of the MSCI ESG rating, and these firms are out of a sudden in the worst 20% within a specific sector, this would be a potential case for direct engagement. The second criteria is related to a violation of minimum standards of conduct. Again, MSCI ESG is evaluating controversies of companies. And whenever there is a red flag behind a controversy, which means that there is a serious violation in the areas of human rights, labor, environment, or corruption, this would be a potential case for us for direct engagement. And finally, and very recently added, this is something I believe you cannot find in the current publication, because it was added to our active ownership policy as of this year, last year. We are starting to engage on the topic of climate with the top 20 CO2 emitters. Again, we run internal analysis. We evaluate which companies are the worst performers in terms of CO2 emissions. We prioritize them in accordance to a forward-looking measure, the so-called ITR, or implied temperature rise, and then we are contacting some of these companies for direct engagements. I would like to also outline that although those are the three main triggers for approaching companies for direct engagements, these are not the only reasons why we would approach a company. We always reserve the right to approach a company for any other matter whenever we see a need, and we categorize those engagements as voluntary engagements. Now, moving on to the process, once a company is being selected, if we can go on the next slide. Once a company is being selected, we write a letter, and we try to identify who the responsible person of that company would be, typically chief sustainability officer, or it can also be investor relations if we cannot find another contact. We send the engagement letter, and after we hear back from the company, we then set up an initial exchange. Normally nowadays we do it online, but we are open to other forms of communication, for example, also visiting the company or inviting the company to our premises to do the initial exchange. The purpose of this exchange is to elaborate on our end in more details the reason why we contacted the company, but at the same time to understand more from the company on what they are doing and how they see the violation or how they see the issue which has been identified on our side. 2 to 4 weeks after the initial meeting, there is a follow-up meeting where we define the goals and targets of the engagement. Typically, a primary goal would be goal related to the initial reason why we contacted the company. For example, if we contacted the company due to a weak MSCI ESG rating, then the primary goal would be to improve the MSCI ESG rating and no longer to be within this category of worst performance within a specific sector. However, we also define secondary goals, which are different targets, measures, activities that should assist the company in reaching the primary goal. After this is being set, we do follow-up calls every 6 months where we go through the list of primary and secondary goals, and we assess how far the company has been doing, whether we can provide any additional support, or whether some of these targets and measures need to be altered depending on what has changed on the market, what other priorities have come out, and so on. We intend to have a conclusion of the engagement after 24 months, and we look in particular of how far the primary goal has been achieved. However, in cases where the primary goal is not achieved, but we see that the company is working towards it, and we see that there is a lot of progress in the secondary goals, we are also open to extending the duration of the engagement to another 6 months, years, depending on a case-to-case basis. If the engagement has not led to a sufficient improvement and we don't see that the company is making sufficient efforts, then we reserve the right to sell the holdings that we have with that specific company. Now, in terms of numbers, what we did over the past 3 years, we have contacted 12 companies. I think something is missing on the slide, but nevertheless, I can elaborate on that. At the moment, there are 7 engagements which are ongoing. So those are engagements where we have regular meetings with the companies. 2 engagements have been closed successfully, which means that the primary goal has been reached. We have 1 engagement which has been accepted. However, activities have not started yet because we only approached the company towards the end of 2025. And there are 2 engagements where the decision whether they would like to accept the engagement with us has been postponed due to different reasons. What you can also see on the bar chart is the number of activities that we have had per category. So, for example, 12 engagement letters have been sent. The introductory meeting has been held only with 10 companies. The goal setting meeting only with 2. This doesn't mean that goals have not been set, because for this part we were often able to clarify the process via email exchange. Then you can also see the statistics on the first, second, third monitoring and follow-up calls. And what you can also see towards the end is that so far we have only had 1 escalation case last year. This was with a company with which we were supposed to have the first follow-up call in July 2025. The company did not respond to our emails in July, in August, in September, and then finally we decided to go to approach higher management via, again, email and letter. And this has led to a successful resolution and continuation of the engagement with the firm. So at any of the engagement steps that we have, we reserve the right to escalate in the cases where we see that the company is either not responding or is underperforming. But as I already mentioned, if we observe cases where there is no commitment from the company side, then we also reserve the right to sell the positions that we have with that specific firm. Of course, this would be the harshest measure that we would take after utilizing other options. So this is what I have prepared in terms of showing you the direct engagements on Baloise active management. And back to Olivia.
Wonderful. Thank you all for your presentations. My name is Olivia. I'm the head of Switzerland and Liechtenstein at the PRI. And I will invite all those, so Ivana, Valerian, and Tilman, if you can put your camera back on, we will be doing a very short panel discussions with a few questions. I mean, thank you for covering your approaches. As mentioned previously, the report covers 14 case studies in total, covering other aspects that we didn't cover during the case studies. So I just wanted to maybe link also with other stewardship topics of interest that we did cover. And starting with you, Valerian, your case study covers your pragmatic approach, where for some asset classes you use direct dialogue, and for other asset classes you delegate dialogue with service providers. If I may start with a questions, where do you think Swiss investors may still underestimate the complexity of effective stewardship when they're setting up their strategy?
Yes, so I briefly mentioned it already, but I think the main challenge is really to understand what it takes to implement a credible stewardship approach and what it implies in terms of resources. Because stewardship can be very easy to implement if you only send a couple of letters or generic letters to the management of a company, but that doesn't really add any value. So if you want your stewardship, your engagement to be credible and add value, it really takes a lot of time and resources. There is, I think, a lot of work to do beforehand to really, in terms of research, to really understand the business model of a company, to get a clear understanding of the areas of improvement that the company might have. And then the engagement process itself, we've seen it today, it takes a lot of time. It can take several years to have any visible results. And also, obviously, the reporting is also a challenge because you have to put together a lot of information and to make it digestible for the readers of that document. So I think that's the challenge, the sheer amount of work behind stewardship and engagement.
Thank you. And moving on to another stewardship process topic we covered during the roundtable, which is voting. Maybe Tilman, I can direct that question to you, because you spoke about your engagement triggers, and one of them is proxy voting. Can you elaborate how you link your voting and your engagement activities?
Sure. Yeah, good question, because voting also sometimes is a bit underestimated, I think. But first, to give you some context, so at the bank, we see proxy voting as the second component of our stewardship approach, besides engagement, as I said. We vote on behalf of our clients for investment funds. And just to give you also some numbers or indications, in 2025, for example, we voted for around 800 meetings and close to 11,000 agenda items. We defined our voting principles in the proxy voting guidelines that are designed to align and reflect our overall approach to sustainable investing, and they focus on mostly important governance issues, but not only. As you can imagine, those are a lot of agenda items, so we work with a professional proxy voting advisor that supports us applying these guidelines correctly. And when a vote involves complex topics, or when stewardship is a key part of a fund's sustainability strategy, we actually reach out to the company before the annual general meeting. And this helps us to better understand the issues on the agenda, but also to share our views on governance with the companies and to trigger some changes, hopefully, around this like period where the company is very receptive for inputs from our side. And we also let the companies usually then know how and why we plan to vote. These conversations often aim to raise the mostly governance concerns, but not only with top management, or also to follow up on earlier talks. Lastly, but also very importantly, I think, we use sometimes adverse vote behavior as an escalation measure in case we don't see sufficient progress with our engagements. So I think that's it for this question.
Yeah, thank you. So we talked about individual engagement, we talked about voting, we talked about escalation strategies, how to set up strategy. There's one aspect we haven't evoked until now, and Ivana, I'm going to direct that question to you, because you mentioned that your active ownership policy has 4 pillars, and one of them is collaborative engagement. This was heavily discussed during the roundtables, including the pros and the cons. How does collaboration fit into your engagement strategy?
Thanks, Olivia, for this question. Yes, indeed. Besides direct engagement, and Balos is focusing also on collaborative engagement together with public policy engagement and proxy voting being the overall 4 pillars of our active ownership strategy. When it comes to collaborative engagements, we are executing them in 2 ways. The first one is we are screening potential options, collaborating engagement options through different platforms, including, for example, the PRI collaborative platform. And we are a supporter of the usual suspects such as Climate Action, Advance, Spring, etc. We are also one of the first signatories of the AMAS engagement letter, which is focusing on Swiss companies. So we're using broader options in terms of where we try to find these engagements. The topics on which we focus are defined every year as part of our active ownership policy. And this is our leading criteria in terms of in which areas we want to operate throughout the year. The second way how we do collaborative engagement is to a third-party service provider, as we already heard from Tilman and Valerian. Active ownership can also be very resource intensive, so we are also trying to get help whenever we can and whenever we find it to be meaningful. We use the collaborating engagement tool of ISS ESG, whereby we are part of the norm-based engagements, covering engagements with companies which have had violations of international standards in the area of labor rights, in the environmental violations or corruption violations, etc. And we are also part of biodiversity thematic engagements and gender equality thematic engagements, both of which are are part of our focus topics of collaborative engagement.
That's very helpful. So now, in the interest of time, I'll move on to maybe a bit of challenges we heard here and there during our roundtables, and I'll start with you, Tilman, regarding actually how do you integrate your organization's commitments or targets into your stewardship activities? Can you walk us through that translation from commitments or targets or anything like this back to stewardship?
Yeah, good question. Thank you. So as I mentioned the bank has several commitments or has several pledges, and we try to base our sustainable investment policy with it, also the stewardship approach, to like translate these commitments into action, right? So, for example, the bank has based its policy on some widely accepted international conventions and standards, including the PRI principles, United Nations Global Compact, United Nations Guiding Principles on Business and Human Rights, and like others that you are probably aware of. And then the bank's asset management also made commitments such as a climate pledge and the finance of biodiversity pledge. So we consider these commitments for our general investment approach, and as part of that, also for our stewardship activities. For that, as you've seen in the presentation before, we defined 3 engagement focus topics, being human rights, climate, and biodiversity. So for each of these topics, we define certain criteria that we use to screen our investment universe and identify companies with increased risks and gaps. And we use this to help, to decide from which companies to engage with, and also on which topics then. And our goal is to support the bank's sustainability commitments and targets with this, and also to help reduce environmental and social risks. Also, lastly to mention is that we have a climate voting policy for the most heavily polluters, where we screen or where we analyze and how far they are like more or less on track with their commitments, programs, targets or not. And if not, we might vote against certain agenda items. For example, offer an election of a director that is responsible for the climate, or more generally for the sustainability program of the company.
Thank you, very helpful. Ivana, I'll jump to you because there are questions in the chat from our audience. So thank you very much for using this opportunity to ask questions. And actually, I will ask you one very short one, and one that is actually a challenge that was discussed quite a lot as well during the roundtables. The first one is, are the engagement conducted by the responsible investment team or by the investment teams? So that's the yes and no question. And then if you can move on to another question which comes up very often, that relates to the impact or outcome of specific engagement. Although the processes are key, having outcome-based approaches often is considered to be good practice. Having said that, it remains very difficult, we all know, to link an outcome to a specific engagement. So how do you measure and evaluate the success of your individual engagement efforts?
Sure. So let me start with the first easy question. The engagements are executed by the responsible investment team. However, many of the engagement cases are proposed by the investment team, and we often invite the portfolio managers at least during our first call with the companies. With respect to the second question, yes, indeed, there has been a huge discussion surrounding, what is the, how do you relate the impact or the outcome of specific engagement? And here, first of all, I would like to outline that it's absolutely important that all the goals, measures that are, or the targets that are defined for a specific engagement have to be reasonable in scope, and they have to be comprehensible. They have to be also not necessarily quantifiable, but measurable, so that at the end of the engagement, you can truly evaluate whether there has been success or not. Now, what we at Baloise claim is that throughout the engagements, we offer support and we offer guidance to the companies. And we feel quite comfortable to do so, especially with companies which are operating in the same or similar industrial sector as ours, because we are very often facing the same challenges. However, we do not claim sole responsibility surrounding the success of an engagement, because first of all, a company could have been contacted by other investors which are having the same issues and are trying to engage with the company on the same matter. Secondly, the companies might have already had processes in place that they were going to do either way. So I think claiming sole responsibility that the success of the engagement, meaning the achievement of the goals of the engagement, are attributed to the company that is starting the engagement, that's not the approach that we are choosing, and that's not what we are claiming that we do.
Very helpful, thank you. And Valerian, if I may, a very last quick question, because I know we're running out of time. You did mention, and I think linked to what Ivana was saying about the reporting and how you report on engagement, you mentioned that reporting is a challenge, and we heard that, especially, I mean, maybe in your case, I would assume, because of the mixed input from your direct engagement and the indirect one. Can you go further into the challenge quite quickly that you're facing, and then we'll just have to close?
Yes, of course. Reporting is definitely a challenge for us because we are dealing with multiple sources, so direct, indirect, and collaborative. And each of these come with different type of informations. We have some different level of the data that we have access to. So it is a challenge for us to consolidate all of it into one single document, because ultimately that's what we want to do. And also we want to have one single document that is coherent and doesn't look like some sort of Frankenstein report. So we are working at the moment on creating a consolidated stewardship report that will include direct, indirect, and collaborative engagement, but also proxy voting, because we think that all of these activities are linked and it makes sense to have them all in one place. But it is quite a challenge to develop it. And yes, of course, if we would have access to some kind of platform where we can have all the input together and extract from it a consolidated report, that would be very nice, but that doesn't exist at the minute. So we do it in-house.
Well noted on the wish. So thank you very much for your time and for your contributions to the AMAS PRI roundtables, as well as for hosting us and for contributing to this webinar. Now I'll give the floor to Victor for some closing remarks.
Thank you, Olivia. And thank you, everyone. A particular thank to also AMAS for the partnership on this publication and for the role they continue to play in convening the Swiss investor community on stewardship. If there is one message I take from today, it's that Swiss stewardship is becoming more mature, but also more demanding. The gap is widening between having a simple policy and having an approach that is repeatable, governed, and credible under scrutiny. What we've heard through the case studies and discussion is that the progress isn't only about adding more activity, but it's also about making the decisions beyond stewardship clearer, meaning what triggers action, how you track progress, and what happens when progress is limited. A second takeaway is that there is no single model, but there are common building blocks that can be adapted, whether you run engagement directly through providers or through collaborative initiatives. The underlying challenge remains the same: It's about aligning internal governance, having good resourcing and incentives so that stewardship is not ad hoc and outcomes can be evidenced. So where do we go from here? We'll keep building on this partnership and work through the AMAS PRI Stewardship Roundtable in 2026, and we will strongly encourage you to join and shape the agenda with us. As some of you may know, since August 2025, we started tackling stewardship through specific sustainability themes, moving from the stewardship in general, which was like the main topic of the first batch of roundtables, to concrete realities of implementation on priority issues. So far, we've held theme sessions on human rights engagement and on engaging with oil and gas companies, and we plan to continue this thematic approach this year. So if you'd like to contribute to a case study, suggest themes, or simply share where you're getting stuck in implementation, we'd be happy to hear about it, and you can reach out to me, Olivia, or Aurelia to discuss this. And we want to make the next set of discussions to be driven by what you're facing on the ground. So your contribution would be very appreciated. And with that, thank you again for your participation today, and for the work you're doing on stewardship practice in Switzerland and in Liechtenstein. And we look forward to continuing the cooperation and the dialogue in the coming months with you. Thank you.